Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The dollar index is down about 0.5% again today, and now it's at a key level of support. Yes, the Fed did leave patient out of their policy statement. They didn't cut rates yesterday, but they are signaling a cut coming in July, and now markets are pricing in as much as 0.5% with about 30% probability. So what we're looking at now is this dollar index against a big level of support, 96 to 96.15 or so. There's a trend line dating back to September. Now for the euro, you have it up there about 114, give or take about a 10 to 25 ticks. What we also have is the 100-day moving average going back to September. Any spike lower in the dollar or any spike higher in the euro has been stopped by that 100-day moving average. So watch this level as a big key area. If we get down below there in the dollar or out above there in the euro, you're getting a breakout or a breakdown. So right now we are still contained. What's going to matter most is the data. First, Philly Fed manufacturing today was no better than New York Empire State manufacturing earlier in the week. Bad reads. But tomorrow we have flash PMI. So now Europe's in the mix as well early, and then U.S. into the morning. So keep an eye on that. If we get worse than expected reads in Europe, it's going to pull that euro back down. Or if we get a contraction here in the U.S., I think that's going to wake up a lot of people, and that's going to really get the dollar through support. So keep an eye on that. Now look at the yen. That is a bull flag breakout with the dollar's weakness. You're getting safe havens moving. Gold ripped higher last night. You're also seeing treasuries even move higher. The 10-year getting down to 2%. Now the Bank of Japan met last night. They're signaling if they would ease if needed, but they're holding policy steady for right now, and that helped lift that yen. And it's seen an extension of gains here today, along with those safe havens, and as the dollar's weakened. So watch this yen. We're out above resistance now, and now there is a path out there. It's about 94, 94 and a half, as long as it can stay above 93, 93 and a quarter. So keep an eye on that. Now the Canadian dollar is also following suit. It's a risk-on move here, but you also have crude oil ripping higher with the U.S. and Iran conflict heating up. So the Canadian dollar is now up to new highs in a good 3-day run. This is a breakout of the Canadian, and it's reversed losses from last week. You don't want to fight this. If you're looking at getting long, you want to just measure your risk, take calculated shots here with the Canadian dollar. But really, the data in Canada has not been good. So you got a path of least resistance technically, but you have retail sales tomorrow out of Canada. If that number's good, you're going to see a path higher into the weekend for the Canadian dollar. And then lastly, on the Aussie dollar, it's just following everything up a bit, down from beaten down territory. It could not break below, what was a low in 2016, a low earlier this year, and now we're getting somewhat of a triple bottom. The Aussie dollar is still very weak, but there is some hopes that U.S. and China trade talks are going to develop into something here in the coming weeks. So that's got the Aussie going higher, and overall just the broader sentiment. But watch this Aussie. If you get any bad news on U.S. and China trade, or if the broader risk environment turns south, the Aussie is going to lead the way lower. So watch that too. Give us a call. We're here to help with anything on the board. 312-278-0500. You can email us at info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and not suitable for all investors. Thanks a lot.